Are you tired of feeling like you're guessing when it comes to picking stocks? Do you want to learn how to invest with confidence and increase your chances of picking winning stocks? Well, you're in luck because in this video, we're going to show you how to do just that. But first, let us introduce ourselves. We are The Healthy Investor, a platform that combines health and financial education to help individuals achieve optimal health and financial well-being. Our team of experts provides actionable insights and guidance on investing, crypto, stock market, and learning, empowering our audience to take control of their health and finances. Join our community to start your journey towards a healthier, wealthier future. And don't forget to like, subscribe, and hit the bell to stay up to date on our latest videos. Step 1. Do your research. The first step in picking winning stocks is to do your research. This means researching the company's financials, management, products, competitors, and overall industry. Look for companies with strong fundamentals such as growing revenue, earnings, and cash flow. Also, pay attention to any potential risks or red flags such as high debt, legal issues, or declining sales. One important factor to consider when doing your research is the company's financial statements, which provide a detailed snapshot of its financial health. These statements include the balance sheet, income statement, and cash flow statement. The balance sheet shows the company's assets, liabilities, and equity at a specific point in time, while the income statement shows its revenue, expenses, and net income over a period of time. The cash flow statement shows the company's cash inflows and outflows over a period of time. Another important factor to consider is the company's management team. Look for companies with experienced and reputable leaders who have a track record of success. You can also research the company's board of directors and their backgrounds. Step 2. Follow the trends. The stock market is influenced by a variety of factors, including economic trends, industry trends, and geopolitical events. Keep up to date on these trends and use them to your advantage. For example, if you notice a growing trend towards renewable energy, you may want to invest in companies that are involved in that industry. One way to follow the trends is to read financial news and analysis. You can subscribe to financial publications such as the Wall Street Journal, Barron's, or Forbes, or follow financial news websites such as Bloomberg or CNBC. You can also follow industry-specific news and analysis such as healthcare or technology to stay up to date on the latest trends. Another way to follow the trends is to attend industry conferences and events. These events provide an opportunity to network with industry experts and learn about the latest developments in a specific industry. You can also participate in webinars and online forums to learn from experts and other investors. Step 3. Consider valuation. The price of a stock is not always a reflection of its true value. Consider the company's valuation metrics, such as price-to-earnings PE ratio, price-to-book PB ratio, and dividend yield, among others. Look for stocks that are undervalued or have strong growth potential. One common valuation metric is the PE ratio, which compares the stock's price to its earnings per share. A low PE ratio may indicate that the stock is undervalued, while a high PE ratio may indicate that the stock is overvalued. However, it's important to consider the company's industry and growth potential when evaluating the PE ratio. Another common valuation metric is the PB ratio, which compares the stock's price to its book value per share. Book value is the value of a company's assets minus its liabilities, divided by the number of shares outstanding. A low PB ratio may indicate that the stock is undervalued, while a high PB ratio may indicate that the stock is overvalued. Finally, consider the company's dividend yield, which represents the annual dividend payment as a percentage of the stock price. Dividend-paying stocks can provide a steady source of income for investors, but it's important to evaluate the company's dividend history and financial health before investing. Step 4. Diversify your portfolio. Picking winning stocks is not just about finding one or two great companies, but also about diversifying your portfolio. This means investing in a mix of stocks from different industries and sectors, as well as other asset classes, such as bonds, real estate, and commodities. Diversification can help minimize your risks and maximize your returns over time. One way to diversify your portfolio is to invest in index funds or exchange-traded funds, ETFs, which track a broad market index or sector. This provides exposure to a wide range of stocks without having to pick individual companies. You can also invest in mutual funds or actively managed funds, which are managed by professional investment managers. Another way to diversify your portfolio is to invest in different asset classes, such as bonds, real estate, and commodities. Bonds provide a fixed income stream and can help balance out the risks of stocks. Real estate can provide a steady source of rental income and can appreciate in value over time. Commodities, such as gold or oil, can provide a hedge against inflation and economic instability. Conclusion. In conclusion, picking winning stocks requires a combination of research, trend analysis, valuation, and diversification. Do your research on the company's financials, management, products, competitors, and industry trends. Follow the trends and use them to your advantage. Consider the company's valuation metrics, such as P/E ratio, P/B ratio, and dividend yield. And finally, diversify your portfolio by investing in a mix of stocks and other asset classes. However, it's important to remember that investing in the stock market involves risks and requires a long-term perspective. No investment strategy can guarantee success, and past performance is not necessarily indicative of future results. Always consult with a financial advisor before making any investment decisions. Thank you for watching this video on how to pick winning stocks. We hope you found it informative and useful. Don't forget to like, subscribe, and hit the bell to stay up to date on our latest videos. And if you have any questions or feedback, please leave a comment below. See you in the next one.